What's going on, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you some of my thoughts on the tickers up here on the left. So as always, we have our broad market, our core list of companies, many of which just reported earnings, and the quickfire round tickers, which the Discord members did vote on. We're going to do something slightly different with the quickfire round. Instead of it just being, the most popular tickers, what we've done is essentially made sure everything on this list has a decent setup headed into the upcoming week. So think of it as 10 trade ideas into, again, the upcoming week of trade. We've rounded it out with a couple extra scans there. We also have some monthly bars to talk about in this week's episode, so let's just dive right into the SPY monthly chart. So as we can see on the monthly chart, we had a 2-month balance here, back-to-back candles occupying almost the same range, and this month we finally took it out to the upside here. One thing I want to point out is that we're still one time framing higher, so lows are continuing to get higher and highs are doing the same thing, right? We have one time framing higher on the monthly chart, which of course is a bullish thing. Breaking out of this 2-month balance is a bullish thing. One thing I of course want to make your attention to, and we've been doing this in the past couple episodes, is the distance from that 20 SMA. And you'll notice it's starting to get a little overextended here. And again, it doesn't mean that the market has to crash, pull back even. It just means it's something to keep an eye on, the fact that we are so extended from this sort of benchmark on the monthly time frame. If we go ahead and throw the Fibonacci's on here from low to high, what I want to point out is even if the market does start to see some downturn, I really don't want you to be, concerned, at least from a longer term perspective, right? We're looking at a monthly chart here, so multi-year perspective, until we get down to pretty much retesting the prior all-time highs in here, which will just about coincide with the 38.2. So the market could pull back, and again, this is longer term thinking here, all the way down to here, find new support at around 350, and then continue a leg up higher. And again, I'm not calling for a market pullback. As we just discussed, the one-time framing higher and the breakout of this 2-month range is of course bullish. We've closed a full-bodied green candle. I don't want to sort of, cloud your vision by talking about this pullback, but just know if anything does come, we're still, this uptrend is so strong and powerful that a pullback, right, is going to be fine at some point in time, and we're going to have to expect that is a deeper pullback, right? So that's just something I want you to keep in mind. Again, not a bearish call at all, but something that I'm starting to think about from a longer term investing perspective. I'm less likely to allocate money to new longs up at this position here than if we were to get some sort of pullback. That would present a better buying opportunity, in my opinion, for some longer term accounts, right? So let's go ahead and get a little bit more granular here. Go to our weekly, of course. If we do that, we'll notice, as always, that gap remains unfilled and starting to see a little bit of an inverted hammer. However, again, where are we in terms of the prior 2-week balance? Really just at the high end. We barely even dipped our toe back into this sort of range, so I can't really say that it's overly bearish, but I also don't want to ignore the fact that it is an inverted hammer with an upper wick here. We could pull back, right? And in that case, you're looking at this 2-week low essentially here, right around 410 quarter. So let's keep going down, go into our daily time frame, and talk about some tradable levels into the upcoming week. What I want to mention is the fact that if we just zoom in here a bit, let's just totally adjust this so it's easier to look at. Do something like this. Notice that we had an incredibly tight period of consolidation and balance. And what happened when we started to break out? We failed right back down into the balance area and went to the lows. So at this point in time, I'm not entirely confident that buyers or sellers have decided really what direction the market will go. As we discussed, we are a little extended from the 20 on the monthly and the weekly time frames. Doesn't mean we have to pull back, but if we were to go lower outside of this sort of 1, 2, 3, I'd just call it a 5-day balance, right? We have let's start this as day 1. We talked about this in the midweek update. 2, 3, 4. Day 5 was the look above and fail outside, and now we have a 6th day inside of this overall balance area. So to me, 416.15 is the line in the sand. If we can hold and consolidate sideways above it, I would expect another attempt to try to break out. But this time around, obviously there will be resistance here around 420.75. To the downside, if 416.15 breaks, right, we've talked about this in the past as well, 413.50 is an intermediate support, but really the line in the sand to the downside is at 410.50. If we come down and retest this area, which it's been tested a few times, right, we came down once, defended it as support. This day up, day down action, we talked about the fact that there are probably stop losses down here. And if that area is violated, I would expect a stop run lower to attempt to come to our next major market area, which, as we've talked about for some time now, is at 405.40. Anything underneath that poor structure all the way down to fill the gap to around $400.67. That is the worst case scenario, in my opinion, for the upcoming week if, again, this is if there is a huge violation and, something bad happens underneath, and by bad, I mean there's some sort of negative catalyst out there in the marketplace that breaks the 416.15 area. That is the worst case scenario to the downside, in my opinion. As it sits right now, sellers were unable to take it underneath that area on Friday. You can see that we have an indecision doji candle here. Buyers weren't sure if they wanted to take it higher. Sellers were pretty weak and were unable to really even attempt to break that 416.15 area on the chart. So to me, SPY, total question mark as it sits right now. We're inside of that 5 to 6 day balance. We've experienced the look above and fail. So buyers, they're showing their hand already a little bit by being, a little lackluster, but sellers also unable to overwhelm the buyers and take it lower, at least to that 20 SMA on the daily time frame. So for me, question mark headed into the upcoming week. The over and under levels to really pay attention to: 416.15 and over, of course, that 418 with a hiccup in the road at 420.75. So the QQQ monthly chart is much different from SPY because you'll notice we clearly have this area of indecision from the monthly perspective before we've started to make a move higher. That to me is a little bit more healthy, the fact that we've seen some back and forth two-sided trade and we haven't just done something like this straight up. So to me, still extended from the 20, but this consolidation makes me feel a little bit more comfortable that we've seen some sideways consolidation and we aren't necessarily due for an aggressive pullback as, something like SPY sort of looks like. And again, looks like, not necessarily calling a bearish top at all. One thing I want to do here as well is just pop on those Fibonacci's and just determine where we're at in terms of pullback if we were to get one. So the 38.2 as it sits right now, if we were to pull back, it's right in line with some of these consolidation lows in here. Again, nothing to really worry about from a longer term perspective. I'm a little bit more willing to allocate money to the QQQ and tech sector, again, considering the fact that it has consolidated for a couple of months before starting to peek its head up and out of this area. Notice that we do have a close right at, slightly above that prior swing high right in here, which was, let's just put a value to it, right around that 338. Okay, so let's drop it down, go to a weekly, and keep drilling lower, just like we did with SPY. Same thing here on the weekly perspective, right? We saw a nice pullback into the 20 simple moving average, rode it higher, and now we're starting to move higher again. So to me, this scenario here is a weekly bull flag. If we can, again, consolidate and hold above that prior sort of pivot high, looks good for higher, in my opinion, here in tech as in the Qs as a whole. Let's go to that daily, pop on our levels, and talk about the tradable areas for this upcoming week. Let's zoom in a bit. And of course, just like SPY, we sort of have a large area of balance. But what I'll say about this one is we don't have that really dramatic look above and fail back down into the range. I'm going to go ahead and adjust this area slightly higher if the platform would agree. Thank you. Up to about 342.36. That's the new breakout area to move to highs. Again, I don't want you to forget that overall, this is a daily bull flag. If we consolidate in the flag more, attempt that high once again, I would expect higher after that to maintain the daily uptrend, the weekly uptrend, and even the monthly uptrend. As it sits right now, the inverted hammer on Friday right at the 20 SMA, if it breaks, we're just looking for a rotation to the bottom end of the flag at 334 the whole dollar. Anything after that, you're going to start looking for, as this goes through time sideways, super support to form here right around that 330 whole dollar down to about 329.50. That should be a super support, at least a first touch bounce. If that starts to get violated, again, this would take sort of a major market catalyst to move the market lower here. I would expect lower to start to fill some of these poor structure gaps underneath us. Worst case scenario, like we talked about with SPY, if this breaks right around 330 this upcoming week, I would expect a move to at least fill this gap to the 50 SMA here around 324.75. Anything underneath, expect the next gap below to fill down to about 320.71. And last but not least, we have IWM Russell 2000 and our small caps. What I want to point out about this particular chart here is the fact that what happened is, look at this. We talked about one time framing higher on SPY, right? So here, it really started on this red candle, right? This is the first one we'll use as September. One time framing higher ever since September. We set a new high and a new higher low past month, but this month completely inside the prior month's range. So that to me, it's not as bullish as if, we were able to set a new high, but to me, again, look at the distance here from the 20 simple moving average, from the 50, which is just below it, and the 200 obviously way down there as well. So again, sideways consolidation up here, even if it were to stay within the prior month's range, healthy in terms of this uptrend that IWM has been on. Some consolidation definitely would not hurt. Let's throw the Fibonacci's on just like we've done with everything else, from low all the way up to the high. And again, even if we were to pull back to the 38.2, what would be happening if we do something like this all the way down to here is, let's just line this up to the past high, right? This was the prior all-time high right in here. We would be holding up above that, right around that 181, 180 area in IWM. So to me, still all healthy, nothing wrong with the uptrend. I want to be abundantly clear that we're just looking at overall benchmarks here inside of some of these market names. We're not trying to call a top. We're just sort of taking them as they lie and looking at what a potential pullback could look like. Let's drill down to that weekly and do the same thing we've done in the past two broad market sectors. IWM, again, consolidation up here at the highs from a weekly perspective. Looks like this. Weekly bull flag to me. If we can take out some of these highs, it's off to the races again and potentially one time framing higher on the monthly chart. I, of course, don't want to ignore the inverted hammer here. It could pull back and retest that 20 one more time. Let's just drill down to the daily to look at some more granular levels to trade against. We're going to pop them back on, and what you'll notice is we sort of talked about this resistance trend line, right? We did something like this. We broke it. Now we're back testing it. I think going into this week, it'll be really critical for IWM to either backtest and bounce higher, in which case we're looking for a move back to the high, up around 230 probably, or it will just show its hand completely, fail underneath the trend line, and sort of, again, expecting chop around that 20 and 50 SMA. You'll notice that we had an area of consolidation and congestion in here. I wouldn't really be too hopeful that it resolves it very quickly. Again, what are we looking at? We have an area of balance. Look below, fail, right to the opposite end. Look above, fail. What would the target be? Obviously the low end of balance. It could be the gap from in the past, which has acted as support here, or the low end, ultimately all the way down there to 215. Worst case scenario, 215 breaks this week. We're looking at 207 quarter. Again, is it going to go there? Again, I think it would take a huge market catalyst for the markets to crumble this week. Earnings essentially flat, as we'll get into in just a moment. I don't really think, IWM does anything other than sideways into the upcoming week, just based on what we just discussed. To the upside, again, you have 230. If it really gets some legs, there's a crazy breakout, crazy catalyst to the upside. Your all-time high resistance is up around 234. So jumping right into Apple, as we mentioned, many of these earnings were lackluster across tech. What we had here was essentially a look above and fail back down into the range, in which case, what's the target? As always, the bottom end of range here at 131.17. So as it sits right now, kind of expecting sideways to down, right? If we break 131.17, look for a move to come back down and test this gap around 128. After that, your critical support is 50 SMA and 126.64, because as we've discussed in prior videos, we essentially do not want to come back down and get into this territory if we're making forward and upward progress. We want to use that as a new higher low and then do something like this. To the upside, if we remain in the flag and break out, back above 135, new resistance here at 137, 138 after that, and then potentially the all-time high up around 145, but as the chart sits right now, expecting sideways to lower in Apple. So Netflix actually was showing some decent relative strength there at the end of the week. As the majority of other companies were seeing the look above and fail, same thing with the market, Netflix actually saw the look below and fail back to the top end of the range and the 200 SMA here. So to me, that's a bullish sign. If we can take out this area here, 515.67, trade up towards that 50 SMA and 20 SMA, which will be more aggressively curling down to meet there at super resistance, 527.50 just about. To the upside after that, it's a little bit of a stretch, especially if we see a sideways market, but the gap could potentially fill all the way up to 546.38. I wouldn't expect much higher than that. I would actually expect a little bit of a negative reaction to that area if we were to make it there this week. To the downside, only looking for shorts if we can take out 500, the round number, and again, quick snappy move down to about 494, we'll call it the whole dollar, but after that, there's a little bit more room to run down to about 478, because as we'll see, if we scroll back here, that was our critical support from in this section of the chart, and I would expect it to act as support on a first touch. So Tesla, what an absolutely interesting day on Friday as well here in this name. Just power move to the upside here, taking back the 50 SMA, retaining this as a support from the flag, which we talked about last week. To the upside now, we're just looking for a break of 720 to trade back up towards this high area in here, around 744 to 748. If that breaks, look for a quick and snappy move to our next resistance around 780. Again, in a sideways market, this may take longer than we expect, but those are the upside targets into the week. To the downside, obviously your critical support is the 2-day low here, around 668.50. If it breaks, not really putting too much emphasis into the 653 area, but really it's sort of all the way down, to me at least, to about 600 here, the low end from this bounce, and then the 200 SMA after that. Again, worst case scenario for Tesla, if it really gets moving to the downside on some sort of catalyst, that recent low from in here could be in play, but as the chart sits, that extremely bullish move on Friday, I'm sort of partial to sideways to up here in Tesla. So Alibaba is one of our companies that has not reported earnings yet, but they're a little bit further out, not something to worry about quite yet. Again, a little bit of a pullback, giving back essentially the week's move, so inverted hammer on the weekly time frame it would look like. I think we move lower, especially with the close underneath this prior area of resistance. Should have acted as support this time around, so now that we're below that 230 just about, look for a move to test the gap one more time. It fills down to about 225 the whole dollar, and support underneath that is all the way down here at 220. To the upside, if we get a reversal, you will have to battle back through those daily moving averages 20 and 50, which are the critical ones, but if we can get through them, looking for a retest of 238 the whole dollar as noted by resistance here. Anything after that, I wouldn't really place too much emphasis into this area here, but rather all the way to the highs of here at 244.76 as the chart sits right now, and as we've been doing so far, expecting sideways to down in BABA. So Facebook, obviously a huge gap up on earnings. It's holding the gap for now, but the inverted hammer there, I would expect a retest of the low end of the sort of earnings move up higher early on in the week. So let's just go ahead and map that out. We'll pop in a level here at 321.61. That is essentially the top of the gap. Let's make that yellow as we always do. And the bottom of the gap essentially fills to the high of this candle. Let's go ahead and adjust that to be yellow as well. So there we go. And the gap fill is down to about 310.40. So keep that in mind. Support trendline obviously was violated here, but we're now back above it. I'm going to just keep it on for maybe a few more days, see how we react if we get into it, and then remove it after that. To me, I'd really want to see this prior area hold up as support. So on any break of this area here, I would be looking for a potential bottom to form at 315 to do something like this and trade back into that earnings gap up range. Obviously, your all-time high is up here at 331.81. If we take it out, just trade higher into blue sky territories. For me on Facebook, it's sideways. Would probably expect to see a retest of the bottom end of that earnings gap up range, as we've mentioned. So NVDA is another culprit that has not reported earnings yet, so not something to worry about as the chart currently lies. And what we're doing here is consolidating into a nice bull flag, in my opinion. If we do something like this, pop the Fibonacci's on from the most recent leg up to the high. Again, you'll notice, I think we talked about this last week as well, we're holding on to that 38.2. So as long as we're consolidating above that number here, right around 590, I would expect bullish in NVIDIA. Again, probably sideways consolidation, maybe a slight upswing into earnings depending on how some semiconductors do in the upcoming weeks. Again, usually you get that earnings ramp up. So upside targets here, if we remain above that 590, would be up around 630, and then obviously the all-time high 650. To the downside, if we fail underneath it, looking for the 50% here, right around 570, to act as super support as we had. Essentially, if we do this, a little area of consolidation there as well. So that's my thoughts there. Bullish into the earnings announcement based on the fact that we're holding up this daily bull flag. So Microsoft, the one that looked oh so good, had a gap down, of course, on earnings. So here is your gap above. Let's go ahead and adjust some of these lines so that they are making a little bit more sense. Obviously, your gap is going to be above. Let's go ahead and change this to yellow as well while we're at it. Above that 256.50 area, you're looking for the gap to fill up to the low of the prior candle. Let's go ahead and map that one in. That's going to be a 2-day low, actually, right around here. So expecting a little bit of a rejection or resistance there when we get there, if we get there, up around that 260.25 mark. So that is the gap above us. Of course, bottom end of this balance will still be in play. It is within the range of the gap, so put a little bit of import into it, but not a whole lot. To the downside, we obviously filled this gap, and if we move underneath that Thursday low, I would expect, again, a move to 247, and underneath that really unlocks the potential for that poor structure underneath us, basically this move here, to sort of crumble. So that's sort of the line in the sand for Microsoft for me this week. Under 247, I think it sort of gets nasty and it takes back a significant piece of this move. Ideally, we want to see it hold on to, again, this area here, just like on Apple. If we're making forward progress, we'll use that as a new higher low. If I grab the other tool, do something like this, and bounce higher out of it, that's going to be at 240, as we mentioned, and we'll just pop a trend line on here as well, because if we go from low and do something like this, you'll notice, of course, that depending on time of week, if we get down into it, could coincide with that 50 SMA, could provide an area of super support, so keep that on your radar. And last but not least, the beast here, Amazon. My goodness, what a move on earnings to the essentially all-time high to the penny, just about. We only took it out by a hair, right? If we scroll back and look, only took it out by a hair, but for now, backing off of it, right? So earnings were really, again, sort of lackluster. We saw the gap up, but no follow through really in any of these names, even Facebook, which held its gap, going sideways to slightly lower, right? So to me, looks like we might want to come down, retest that 34.30, in which case, looking for that to act as a first touch bounce area. If it breaks, kind of nasty here, I would expect Amazon to come back into that 33.25 area, and depending on, we are slightly extended from the 20 SMA, I guess is what I'm getting at here. So if we make a move underneath that 34.30, first touch intraday bounce only at the 20 SMA, but really targeting this area here on any further breakdown. To the upside, if we see a massive reversal off of this area, if we do something like this a little lower, then curl higher. Obviously, your resistance is here, all-time high 35.50. Anything over that, blue sky levels, $1.50, intraday levels that do form. Alrighty, go ahead and hit that thumbs up button if you have not done so already, and let's move right into these 10 trade ideas. The first one is on Snowflake. We clearly have a well-defined pressure cooker top at 242. If we take that area out, looking for a day trade higher to potentially just trade up towards that 250 mark, if you decide to swing trade it, you'll notice there's some clearance all the way up to about 266, which was a prior area of support from in here. The key on this one is making a strong close above the 20 SMA and 50 SMA here. You clearly don't want to see it violate the support trend line either. So again, bullish trade idea if we can take out 242, the whole dollar. Next up, we have Walmart. This is another bullish trade idea. If we just zoom in a bit, what you'll notice is the proximity of potential touches to the resistance trend line. So anchor, touch 1, 2, 3, and potentially 4, but look at the duration of time spent between these two. To me, that acts as a pressure cooker top, and we're looking for a breakout to potentially fill the gap from the last earnings cycle all the way up to about 144.50. Potential day trade would be over 141.50, so looking for, the break of that critical level to get into the gap, or if you're a swing trader, take it on the break of the 200 SMA and 20 SMA. The other thing I like about this potential setup here is we had a look above and fail into the range, look below, fail back into the range. So to me, it would make sense that buyers and sellers aren't fully convinced. So on the break of the resistance trend line, we may see a stronger influx of buyers as opposed to this first attempt from back in here. Next trade idea is on Snapchat. This one is sort of a poor man's inverted head and shoulders. Earnings are in the past, so not really something to worry about, but shoulder 1, head, and again, shoulder 2 is a little bit much higher. So again, something to keep in mind. It's not the cleanest pattern here, but the breakout level is well defined at 64.20. If we can take it out, room to run towards this sort of pivot high in here around 68.80. After that, all-time high. Again, take it for a day trade and look at this high here, or a swing trade and look for some of those higher targets. To me, a stop loss on this one would have to be underneath the 20 SMA if you're a swing trader, or if you're a day trader, look above and fail back down. Your stop is just underneath that 6 64 whole dollar. Next up, we have Dropbox, and this is actually a bearish sort of trade setup. However, earnings are around the corner. You will have to be careful with this one. To me, it looks like we're setting up a flush point, right? All these touches here with especially lower highs coming into it. If that breaks at 25.50, we're looking for a flush underneath. I would just trade it down towards 25 the whole dollar. After that, if I had to pick out an area, another 50 cents lower sort of coincides with these highs right around 24.50. Again, keep in mind earnings on this one. But rather the 50 SMA is there as well. So that to me is boding well for a flush if it breaks, because stronger buyers essentially are going to have to fold and close their positions underneath this area. The resistance trend line isn't so clean on this one, but again, do know that there are lower highs coming into it. CRM is up next, and this one is a bearish trade idea as well. Reason being, we have an area of balance, right in here. We have a look above and fail into the range. So as always, the target is the low end, but as you'll notice, you have the 220 SMA stacking. The clear signal for entry on this one is a break of those levels, a close underneath, or some momentum early on in the week. Just look for the move down to about 227.50. After that, you're looking at the 50 SMA as a target below, around 221, the whole dollar, I would call it, as it slightly moves lower. Next up, we have Peloton, and I have to give full credit where credit is due. Our friend Jay from the specialist community, if you don't know what that is, it's the private section of the Discord, essentially for course members. He brought this setup up, and this is a beautiful head and shoulders, right? Look at this, head, shoulder 2. It's a longer time frame pattern, so I'm not entirely worried about earnings here, but if we are to start breaking this 98 to about 100 critical area of support, there is some room to move lower. Now, traditionally, the target on a head and shoulders is essentially this distance here, which in this instance is about $70, $75. And I don't necessarily think that Peloton will trade all the way down towards 30, but there is some room to run lower, essentially, to this area of support from consolidation in here. If we just grab the right tool for a moment, back in here, there we go, around $78, $80. So a significant portion, meat on the bone, essentially, to trade this one lower, regardless of what happens on earnings. You can wait until after the announcement. You can take the break. You could wait for the retest and then take it lower. There's a number of ways to look at it, but nice head and shoulders here in Peloton. Next up is Comcast, and this is a beautiful 2-day balance, essentially, and filled the gap almost on this Friday session. Huge lower wick. If we take out the 2-day highs, we're just looking to trade up towards the all-time highs, because notice we also have those 2-day highs coinciding with a prior pressure cooker top right around our 56.50. Again, if we take it out, trade up towards that all-time high 58. I would probably just be watching out for that whole number, 58, the whole number. You can see there are some wicks coming in early around 57.50. So again, looking for more of a day trade here, quick snappy move up and over that 56.50. Next up is Boeing, and this is another trade idea very similar to the Dropbox trade idea. A flush point, right? We have all the touches to support, 1, 2, close proximity. The closer these get, I mean, look at this. It's like half the amount of time to retest that same 231.82 area of support. If it breaks, looking to trade lower, earnings is no longer a factor here. Looking more for the day trade than anything else. I don't really like fighting the overall choppiness of Boeing. It seems to be up, down, up, down. But for me, again, short-term duration trade underneath 232. We'll call it the whole dollar there for a scalp lower. Next up is HIG for the Hartford company, and just a beautiful area of balance, right? Very well defined, clear over and under level, testing the lower end now. Earnings are in the past. I'm not sure if this conference call is a real thing or if it's just a glitch on Thinkorswim's end, but keep it in mind, could throw some volatility in there underneath 65.60. I would trade it towards that 50 SMA first, and then the low end of this really large, aggressive sort of expansion of range candle. So that would be right around our 57.75 mark to the upside. If we get a turn here, just looking for the top end of balance. But as it sits right now, I'm sort of expecting the flush, right? If it was going to break out, it looked like it should have went here. Did not happen. Earnings sort of sent it a little bit lower, a little bit, of a similar aspect to what we have in Apple, expecting sideways to lower here in HIG. And lastly, TSM, Taiwan Semiconductors, and to me, beautiful symmetrical triangle running out of room. The support trend line is a little bit longer duration, so it definitely has a little bit more import into it in my opinion. However, again, you always expect those to sort of break after you've not set a higher high, 2 now consecutive lower highs. I don't want to ignore the fact, right, that we have higher lows, but as it continues to, pressure builds into the end of this triangle, moving averages ranges are now above. It looks like it could move lower, in which case looking for a quick scalp down towards around that 105 low of the move here. It's actually closer to 107, 108, depending on how you want to play it. That would be the target there. That's going to wrap up the quickfire round. I really hope you enjoyed the setups here instead of just, the more popular tickers that were voted on. If you take action on any of them, come back to the video. Let me know down below in the comments section. If you learned anything else from the video, let me know down there as well, or simply leave the video a thumbs up. That being said, I wish you all a green trading week.